All right, I am back from DC and back from New Orleans on my family vacation and then my business trip. It was so hot in New Orleans. I had to throw my entire suit away. It was ruined. It was so hot. So now I need a new suit. Well, I have a few. But, anyways, here's what the SPX looked like. It made this fantastic run while I was in DC. And then it petered out right here at about 45 or 44.50. And then when I put in all my covered calls, it was this day right here. And then I went on my business trip. So, yeah, it has not been good timing for me at all with these trips, but you still have to look for trades. So, it's a new month, which means we can trade these ones that have monthly options and not weekly options. One of my favorites, like I said, is SYF, Synchrony Financial. SYF has been getting a little beat down, and the reason is that it's in the financial services space. It's not getting crushed like the banks, but it is in that space, so there has been a bit of a sell off. And you see this sell off is bigger than the SPX sell off, which means it's relatively weak based on SPX. But while the banks are down, this one has been up a little bit, less than 1%. And we're still 2 weeks out or 12 days out from the expiration of the options. So there should be pretty good premium out there. We're not at a level. A level would be right here, be about 32.50. 33 is, it could be a decent level, but it's nowhere near. So what I'm gonna do is I'm gonna check and see what I got. If I got any positions on SYF. Come on, come on. SYF right now. Yeah, I have some at 32.71, and I got a call out there for 34 in 2 weeks. So that's the next expiration. And I got a nice cost basis at 32.72. It's currently trading. It's currently trading at 33.84. So this is an opportunity where I can keep my low cost shares, and if they get assigned 30 at 34, I can lock in some lower cost shares. And this is what I'm going to do. I'm going to do a cash secured put at 32. Sell a cash secured put at 32 with about 2 weeks left for expiration. I'm going to try and get $30 on that, which means it's going to have to pull back, which it is. It was at 0.82. Now it's at 0.74. Hopefully I get that $30 in. Now this is what I'm going to do. If this triggers at 32, then I'll have a cost basis at 32, and I'll have a cost basis at 32.71. If this doesn't trigger, if the call triggers, then this one will expire, and then the call will trigger at 34, locking in some nice premium on that. So either way, one of these is going to trigger on the 21st. Either the covered call at 34 with a nice rise, or this cash secured put at 32 at a decent level. So that's how you play the levels with Synchrony Financial. And I'm going to revisit this if the market doesn't take off. If I don't get a fill at 0.30, I'm going to I'm going to pull it back and try and get a fill at 0.25, just so you guys know my plan. See, no fill right here. Hopefully I could get a fill later in the day. But that's my Synchrony Financial, kind of straddling the fence on these covered calls and cash secured puts.